This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. Going to give you a stock market update. We're going to go through the S&P in multiple timeframes using the spider. And what I want to do is look at the sentiment numbers. I want to look at volatility, and then we'll go through the different timeframes in both trend and momentum. Let's go ahead and get going. Now, if you're interested in learning some more about some of these techniques, I would suggest starting with my book. It's at rabilstockresearch.com/book. And also, if you do enjoy this content, please hit the like button and also subscribe. All right, what I like to do is go through the list and then get rid of this chart and then go through the actual indicators themselves and give it a little bit more detail. So sentiment did jump. We had negative 2%, meaning more negative, which means 2% more bears than bulls last week. And we've been negative now for several weeks in a row where there's been more bears than bulls. But this week we actually popped up above neutral, went to 6% more bulls than bears. And it's a pretty big jump in a single week. We went from -2 to +6. So I did move this to neutral. It's still not this type of situation where I would consider it bearish, but I think it has alleviated some of that pressure. Overbought, oversold. We've now moved the RSI 5 up to the 70 mark. All right. It was deeply oversold. Now this is the weekly RSI 5, all right, and I just like to use that as just a short-term gauge of where we are, in terms of overbought, oversold. In terms of volatility, the weekly is negative. I'll show you that in a second, and the daily is actually positive right now. In terms of the trends, so monthly has remained positive throughout. All right, we had a period now where both weekly and daily were negative, and now look at what's happened. We've got the day. This mark is in the wrong one. This should be up here. So we've got a daily that's positive and a weekly that's neutral now, and then on a momentum basis, we've got neutral monthly, neutral daily, and the weekly is really the fly in the ointment when it comes to the momentum. All right, let's go through and look at this in a little bit more detail. So we've had this massive jump in volatility, and this is the average true range. I use a 20-period average true range, and then I add an 18 MA overlaying on top there. The actual slope of the moving average is what I gauge as being the most important to me, because this line can really jump around. So we've had rising volatility really since April of last year, and we were in a situation where even though this was going up, the volatility was really climbing. And then we lost momentum, and that's really where the risk kicked in. All right, now this has gotten so far away from the moving average, I kind of feel like there's going to be some kind of a retracement, reversion to the mean type of a deal coming, is what I'd be expecting after this big of a jump. All right, on the daily chart, we've actually had, it started declining back in early April and has just continued to drop, and now we've got that moving average dropping. Now, what I've been telling my subscribers, I really think we want to, if you notice, this is all taking place without any real pullback. We had this minor pullback here, but I would really like to see another test of these lines, especially now that we've gotten above the 18-week. And I think if we get a test, any kind of a minor pullback, even something like this, that keeps this declining, then I would say that's very bullish. I'd like to see the RSI 5 come back a little bit closer to neutral on the daily chart. I think if we can pull that off and not get this ATR climbing, then we're looking at a pretty good shorter term signal. The longer term trades, I still think have a little bit more risk to them. There's a lot of volatility in the environment. But from a short-term standpoint, we might have the ability to make a little bit of a trading move. Now, what I suggest when there's high volatility on the high time frame and there's not as much on the low time frame, that you alter your trading approach a little bit. You take quicker targets and or you could potentially give a trade that's off the daily chart a little bit more room using maybe weekly risk, and then take targets a little bit more quickly. So there's a couple different ways to handle that. This is covered in my course. I do give different examples. My third course is called Trend and Volatility, and basically what it's using is the spider in different situations like this to try and determine the best best operation mode, right? How do we handle this type of situation? All right, let's switch over to the different time frames. So we had this big reversal bar that took place on the monthly chart. It came back to the 50% retracement of the move from this low to this high. We retraced to the 50%, right to the 40-month moving average. That's the blue line, and this breakout area, and have gone straight back up. All right. And we close back above this 18-month. And the reason why that's so important is we're not shifting the slope of this line at all. It's staying in the same. It hasn't changed at all. It's staying in the same direction. No loss of momentum there. All right. Now, one thing that did take place with this drop is the MACD dropped down under the signal line. That's no small thing. The other thing is that the red DI crossed above green DI, and it also crossed above 25. But what it didn't do is cross above the last green peak. So the buyers are still in command based on the way that I read the indicator off of the monthly chart. It still has a bullish bias, but we have lost some momentum. Now, if you notice what's taken place, I mean, this is a very small little sliver of space between the MACD and its signal line. So that's not really growing like it did here. As this continued to kind of drop, we started to get more space. So, it's possible we end up playing out in a way where we have to trade back and test this area before we kind of turn back up based on what the MACD did, but doesn't mean we have to roll back down and do what we did back in 22. All right. So don't think that every time we cross the MACD crosses a signal line, it is a long-term bearish. But when it happens on a monthly chart, it's at least a few months worth, right? Because it's a monthly chart. I mean, we're not. It's not the type of thing that it's very unlikely that we're just going to go right back up. Now, if we do go right back up, now think about this. If we do go to a new high, there's no way the monthly MACD is going to confirm. That would set up a divergence on the monthly MACD if this were to turn back down, and that would be even a more bearish pattern if it played out that way. All right, so the real negative, as I see it in the market right now, is this momentum condition based on the ADX. So I want to make sure you understand, if we go back to 2020, you can see we had kind of a flush move to the downside with massive negative ADX, and it basically just turned right back around. Now, in these situations, we look at the fib retracement. When it got back above here, I think that alleviated a lot of the pressure, and that's what's happening now in this current market. But I think the high probability entry is kind of like our first test of the 18, when we can get back above the 18. So what's taken place this week, I think, is pretty important. Let me go back, and you can see that we have crossed above the 18. Now, if we get back, let's say we move up a little bit more early next week, and then we start this pullback, and we start to cup around and hold. We get a mild pull. It's all about a mild pullback. If we get a mild orderly pullback into the area, and it could drift down a little bit below the 18, but we still want that 18 cupping around, then I would say that would be a really encouraging sign for the market. Because the way I felt like this could play out, we had one of two things. We could either come here and fail, right, and then come down and either test, break down, or whatever. But if it's gonna be bullish, it's either gonna come down first and then come back up through this area, or we're going to get through it, and then we're going to pull back and have to hold it. So these two lines are still really important to watch. We can't just ignore them. The other thing that I'm watching for is to see if we can get this MACD above its signal line. If we get through let's say we finish this week, and there's no real negative price action, and then we had a little follow through next week, and it's not a really harsh week to the downside, then this is probably going to cross over at that point. And what that does for me is that it sets up the potential for a pinch on a pullback. This could pinch in while this is settling back down. Now, it's tough. It's tough to be overly bullish with this pattern like this. Okay, and I'm still sort of the opinion that we could chop around in here, but we have to respect the volatility having an influence on ADX. ADX has a significant amount of lag when there's volatility. So we have to lean on other things because we can't. So in other words, we can't base all of our decisions off of one indicator. We have to look at other things. If MACD crosses over and holds on a pullback, if the RSI shows signs of improvement, we have to kind of respect that. I did want to take a minute and talk about this. If you notice, we've now created air on the RSI 5 on the weekly chart. All right, we've gotten overbought. So now the question becomes, if we can get this back to 50 and this RSI 20 holds the 50 mark, then we have a weekly RSI buy, right? We're looking for this to happen on the daily chart, but it could happen on the weekly. So now that there's air above, we have to be on the lookout for that and see if it develops on some kind of a retracement. All right. Now, I did want to cover a few other things. So notice what the daily has done. It's pushed up enough and it keeps climbing that now the 18 is above the 40 and both lines are rising. MACD is well above the signal line. It's leaving itself some room that this could actually correct and still be above zero. That's kind of important to me. The other thing that's important is Green DI did take out the last red peak. We do have the buyers in command on this time frame. Now, they're in command, but they're not strong because ADX is still low. All right, note the difference. So we do have enough strength in the buyers to get the ADX rising, but it hasn't crossed above this key 25 line. So we could still be in a situation where, like the bulls are in command right now, but they're not as strong as the last peak in the seller. So I would say the bias is still to the downside based on this indicator, even though from a short-term standpoint, we've seen signs of improvement. What that short-term sign tells me is that we're probably not going straight down. I hope all this is making sense to everybody. So what we should expect to look for, if we're going to top out here, it's going to take a little bit of work. We're not going to just go straight down based on what's taking place here and what's taking place here. Now, we can also see that when we look at the hourly chart. Now, last week, I apologize. I had this on the SPX. It should be on the Spider, but it's not a big deal. I mean, everything is really the same, but I had already drawn in these trend lines, so I knew I wanted to show this from last week's pattern. So what happened was we had this break. Now, we also had a break here where you keep breaking these trend lines, right? And then you only get the one. And then once you go to a new high, you have to alter the trend line. So that's what happened here. We altered the trend line. We moved it to here. And then we broke this. We rallied up and tested this high. In fact, made a marginal new high. And then I said, if we come back down through this low, and I had this alarmed, and if it were to come back down and break that low, that would be a little bit more meaningful because we've reversed this trend and we would have been breaking the zero line at the same time. And we had some momentum loss. All right. Now, what we have to do here is actually take this line and adjust it. All right. Now we're looking at this as our trend. Our trend line would be right there. All right. And you want yours extending out, right? So you can actually alarm it. So if it breaks, so you have the trend line in place. Now, the only divergence I'm showing is in the MACD. If you notice, the MACD here is not confirming the most recent action, but look at how strong of a reading we got in ADX. So I'm not really of the opinion that this thing is going to turn down really quickly. I would think this is enough strength to keep this pushing into next week. All right, but we have to start the process all over again. So this low here is no longer of importance. We are now looking for a new break, right? And then a new failure and then a new top. We need a 1, 2, 3 reversal. And we want that 1, 2, 3 reversal to coincide with a break of the 18-day, all right? If it's really meaningful. When we've got an upward sloping trend on this time frame, then we usually need more evidence. We need another lower high and another lower low to convincingly break the 18. We want there to be confluence amongst the trends. The way to get the confluence is to have not just a 1, 2, 3 on one time frame. If this time frame is up and there's improving momentum, then we don't view that as a reversal. Where I use the 1, 2, 3 is when it's in conjunction with the higher time frame. So let's say we pulled back to the 18 and this was going the opposite direction and we got a little quick 1, 2, 3 reversal coming back up. To me, that would be very bullish because it's in conjunction with the higher time frame. All right, make sure you're understanding your time frames. So that's the update for the week, and we'll see you next time.